Okay, welcome to today's webinar on the Raleigh Short-Term Land Banking Fund. Appreciate everybody joining today. We're excited to be able to announce this offering. Before we begin, we do have a few slides with disclosures and some other pertinent information that our legal team has written for your review. We'll show each of these, allowing enough time for everybody to review these. Please note there is a full PPM available for download in the documents section on the offering page of the website. All details can be found there, as well as a financial model. Additional general risk disclosures. We do want to clarify again that this is an investment. All investments do involve risk, which are outlined in this slide and in addition in the PPM. So talking about this offering today, for land banking. So while this offering clearly differs from the typical farmland and timber investments that you see on our platform, you will see here that it is still an investment underpinned by land. And what sets this offering apart is that it differs from our typical investment opportunities, and that is a targeted shorter term hold period. So in this case, a 34-month hold period. And it offers the potential for quarterly distributions throughout the targeted hold period. We've received consistent feedback from investors for offerings that have shorter hold periods and the potential for more frequent distributions and current yield opportunities. And land banking tends to be a yield-focused investment with historically higher yields, according to 4-Star, whereas farmland investments are typically longer-term investments with both capital appreciation and a yield component, but albeit lower yields when compared to a land banking offering. So we're going to walk through the land banking process, but an important aspect that came across in our diligence is that land banking is a very well-established practice within the home building industry, with multi-billions committed to this industry annually. The location of this land banking project is also very important. This is located in the Raleigh MSA. This is a market that is chronically undersupplied for single-family housing, with a real need for continual housing development. And finally, by operating as a broker-dealer at AcreTrader Financial, we're able to collaborate with groups such as Yield Street to provide alternative, land-based, yield-focused offerings for investors to further diversify their alternatives portfolios. We believe we were able to provide a highly detailed view of land banking here due to our Acres product, which we're going to go through. So in addition to the significant underwriting and diligence work that was conducted by the team at Yield Street, our Acres database further allows us to verify land valuations for lot development. So this offering is being made to AcreTrader investors in the form of an equity stake in a fund managed by Yield Street Management. We're excited to be able to partner with them. The fund itself has invested equity into a joint venture between Yield Street and Domain Real Estate Partners, who is the land banking sponsor here, who has a contractual agreement with a large regional home builder who is developing and acquiring the lots. We'll walk through this in more detail throughout this offering, and again, there's a full PPM available for download in the documents section of the website. Again, we've consistently received feedback from investors that they would like to see shorter term hold periods with a greater yield component, and therefore, we're really pleased to be able to offer something that fits that mandate for investors. The offering is intended to raise up to $750,000 with a minimum investment of $20,000. The targeted hold period is 34 months. And distributions, again, are targeted quarterly. The offering will be live and available on Wednesday, December 13th at 1 p.m. Central Time. So this is an overview of the land banking process. The key points to understand are that the home builder handles all of the sourcing and the diligence and the development, while the land banker provides the short-term financing. So working from left to right on this slide, at the top here, the home builder identifies the land acquisition opportunities. They complete all the due diligence, including the environmental surveys, the engineering work, and the permitting, and then they place the land under contract. And this is where the land banker steps in to close on the land and take title to the land. At this point, the home builder puts down a non-refundable deposit that is typically 15% of the cost of the fully developed lot, meaning the cost of the land and the horizontal development to get the land ready for vertical development. As part of the contractual agreement between the home builder and the land banker, the home builder also provides a completion guarantee on the horizontal development at a fixed price, further mitigating any development risk for the land banker. And finally, as a part of the agreement, the home builder agrees to purchase the lots at a fixed price at a fixed delivery schedule, and that is all contractually outlined in the option agreement. So Land banking provides home builders with off-balance sheet treatment of land and timely control over home construction timing. And this has really become a well-established financing arrangement for home builders over the last decade. So land banking agreements allow builders to not tie up all their capital in the land until necessary, and allows builders to only take delivery of finished lots once it is ready for vertical development. This is really simply a form of just-in-time inventory management for home builders. You can see in the chart on the right here, this is the annual average lots as a percent of total controlled lots that are under an option or land banking arrangement for the 10 largest publicly traded home builders in the country. As you can see, this has been standard inventory management practice for major builders for years now. So now we're going to look at single-family housing market in the United States overall, and then Raleigh specifically. This is an important consideration as you think about this investment. So first, looking at the overall big picture, it took over a decade following the financial crisis of 08 and 09 for single-family housing starts to return to their long-term average of 1 million single-family homes. This is despite population growth and increased household formation over this time frame, which you can see here. So just to kind of put it in context, here we show single-family housing starts per capita. This is, over the last decade, single-family housing starts finally returned to their long-term average, and yet the U.S. population has increased 33% since 1990. And single-family starts clearly have not kept pace, so we continue to be in this undersupplied market across the country. This is an index from Zonda, which is a leading advisor to the home building industry. This index shows how over or undersupplied the availability of single-family housing lots are in the United States. This is an indicator based on the number of single-family vacant developed lots and the rate at which those lots are absorbed. So basically, home builders are finishing and selling homes at a faster rate than they can replenish their lot supply. And this is partly what drives the need for land banking financing. And what you see here in gray is the United States overall, and then in green is the Raleigh MSA specifically. The dotted line here is the line, according to Zonda, that indicates a significantly undersupplied housing lot environment. The United States has been significantly undersupplied since 2017, while the Raleigh MSA index stands at just 41.4, indicating a severely undersupplied availability of housing lots in the Raleigh MSA. So looking at Raleigh MSA more specifically, where these two land banking projects are located, one of the most important drivers to housing is population growth. So according to the Federal Reserve, the Raleigh MSA has consistently been one of the fastest growing MSAs in the country. Over this time frame, the Raleigh MSA has grown at 4.7 times the national average. And in addition to population growth, the Raleigh MSA has consistently demonstrated lower unemployment rates than the national average and greater median household income. The Raleigh MSA's household income has averaged 28% above the national average since 2000, according to the Federal Reserve. We believe all this supports a strong housing market in this MSA. So when you combine the growth and employment strength, again, it does lead to this consistently undersupplied housing market. So from left to right here, you see single-family home building permits on a per capita basis in the Raleigh MSA remain at just 53% of their 2001 peak levels. The number of active listings per capita have been consistently low and below the national average, and then the number of median days for a single-family house on the market has remained below the national average, again pointing to the demand for housing in this market. So again, population growth, strong employment, that's led to consistently strong housing prices. So this is data from Redfin that shows that the median sales price for single-family homes has grown by a 6.8% compound annual growth rate since 2012. Here you can see the impact that higher interest rates have had on the single-family housing market in Raleigh. So average new listings in the Raleigh MSA are down 24% year-to-date through October compared to 2022. This limited supply is the result of many homeowners being locked into lower interest rate mortgages and therefore not willing to sell their homes and move. This has increased the demand for new single-family homes and therefore the need for lot development. So during and following the pandemic, the inventory of homes for sale fell well below the long-term average, and the inventory of for-sale homes has remained depressed since the pandemic. The average number of single-family homes for sale in the Raleigh MSA are down 45% compared to their long-term average. Again, this just stresses the need for new single-family home construction and therefore lot development. So now we're going to look at the specifics for each of these projects. These have been sourced and put under contract by a large regional home builder and then underwritten by Domain Real Estate Partners, the sponsor, also underwritten by the investment bank who holds the senior note, and the Yield Street team who originally did the diligence on this offering, and the outside consultants that have been hired. So then in addition to all of that, and verifying the previous underwrite and structure, one additional angle that we can bring to the table is through our ACRES database. So our ACRES data was originally developed to analyze and evaluate farmland and timber. However, we found the data is also very valuable for analyzing land development projects and housing. So you can see the Morris and Wendell Ridge projects here in white, and then the land development comps that we have reviewed in red. In total, we identified 80 comparable land development transactions between 2016 and 2023. You can see, again, the two development projects here. The Morris project is less than 2 miles from downtown Wake Forest, and that is meant to target the 55 and older active adult community. This is going to be the only active adult community in the market once it comes available. And then the Wendell Ridge property consists of 110 single-family homes that are targeting both first-time and move-up buyers. Both of these properties are approximately 18 miles from downtown Raleigh. This is an area that has been very active for new development. So lot value is certainly more important than land value as you kind of think about a land banking offering, but this exercise can demonstrate the appreciation for development land in the Raleigh MSA recently. So we were able to use our ACRES data to look at bare ground appreciation for residential development land, and it points to significant price appreciation for bare ground suitable for residential development. So this data from ACRES shows that the average price per acre has doubled over the last 6 years. So obviously for any single family home development, the final home sales price is key to home builder margins. We were able to use our ACRES data to isolate 2023 average sale prices for age-targeted communities in the Raleigh MSA that are comparable to the Morris development that you see here. The targeted average sales price for the Morris active adult development is approximately $570,000. Based on recent comps in the MSA that we were able to pull, the targeted ASP for this development is well in line with recent transactions through 2023 in the market. There are currently no active or planned age-targeted communities in Wake Forest outside of this Morris development, and therefore this should be well positioned as it comes to market. The Del Webb at Traditions is the closest geographically, while Toll Brothers Retreat at Cedar Crossing is the closest development from an amenities standpoint. And you can see here that the targeted ASP is well below both of these price points. So here you can see the Wendell submarket. This is Wendell Ridge. We're east of downtown Raleigh. The targeted average sales price for Wendell Ridge is approximately $514,000. Wendell Falls, which is just to the northwest here of Wendell Ridge, is a master plan development that began selling lots in 2015, and it provides a very good proxy for Wendell Ridge. Wendell Falls contains smaller lots from a variety of builders, and it sold 105 homes in 2023 at an average sales price of $142,000 approximately for a comparable product to what will be featured in the Wendell Ridge development. We then looked at average sales prices in 2023 of recently closed development projects. The targeted approximately $514,000 average sales price for Wendell Ridge appears pretty conservative relative to these other similar developments. So can appreciate that this chart does look complex, and to a degree it is, but this is as simplified as we can make it. So we'll take some time to walk through it. Again, there's a full PPM available for download. But we're excited to be able to work with the team at Yield Street and offer this investment to our investors. Investors who participate in this offering are going to invest in an entity, in this case Acre Trader 245 LLC, the company, that will invest in a fund which has invested in a joint venture with the sponsor, Domain Real Estate Partners. This joint venture was established to provide a loan to the land banker, which is the property owner for the Morris and the Wendell Ridge sites, as we just discussed. So the land banker here is a wholly owned subsidiary of the sponsor, Domain Real Estate Partners. The land banker has entered into a contractual agreement with the home builder for the Morris and Wendell Ridge site developments. The sponsor team here, Domain Real Estate Partners, has invested in 169 communities across the country, comprising approximately $5 billion in total project costs, and has had 74 successful exits. So this is a well-seasoned sponsor in the land banking industry with a large regional home builder here. And again, further details are available in the PPM. So the structure of this investment is debt-like in nature. The goal is to be able to provide quarterly income and a shorter term hold period for investors. The first distribution is planned for the first quarter of 2024, with the final lot sale and the eventual close of the fund targeted for the fourth quarter of 2026. So it's a 34-month total hold period here. Again, all of these offering details are in the PPM in the document section. There's also a financial model available. So we understand that many investors prefer to ask questions individually, and we please ask that you call us, email us, reach out on the chat. Any way we can answer any questions that you may have. We're very excited to be able to offer this to our investors, shorter term hold period with a yield focused offering. Thank you very much.